Good day Forex trader. Your USD Forex signal, looking bearish. The FOMC put new strength into the US dollar. Today's your USD signals. Risk 0.75%. Trades may only be entered between 8 a.m. and 5 p.m. London time today. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1229, $1.1250 or $1.1261. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1195 or $1.1155. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote in my last forecast on January 19 that I had no bias on the day's direction. I was looking to scalp reversals from $1.1317 or $1.1352. This was a pretty good call as the price mostly remained within these boundaries during the London session, and it may have been possible to scalp a few short pips off $1.1352 when it was first reached. The technical picture today is very clear. We have a bearish situation whose immediate trigger is yesterday's more hawkish than expected policy statement from the U.S. Federal Reserve. The Fed showed it is more worried about inflation than before, and Jerome Powell evaded questions about a faster pace of rate hikes. This has boosted yields on the US dollar and made it a more attractive currency to buy. We have seen the results over the past few hours, with the price falling firmly and cleanly to new lows as it broke through several likely support levels. It may be that the market will pause or be affected by US advanced GDP data today if the number released is a big surprise. Yet it seems very unlikely we will see anything other than a strong US dollar today. For this reason, I am looking to only take short trades in the EUR-USD currency pair today. There are 3 resistance levels close by that can give swing traders good opportunities to enter after a retracement and failed test from below. I see the most attractive level as $1.1250 as it is a key half and quarter number. Gbp Usd Forex signal, drop to 1.3300 can't be ruled out. The pair will likely keep falling as bears target the next key support level at 1.3300. Bearish view. Sell the Gbp USD pair and set a take profit at 1.3300. Add a stop loss at 1.3550. Timeline, 2 days. Bullish view. Set a buy stop at 1.3460 and a take profit at 1.3525. Add a stop loss at 1.3380. The Gbp USD pair retreated sharply on Thursday morning as investors reflected on the latest interest rate decision by the Fed. The pair has also sold off lately because of the ongoing political crisis in the United Kingdom. It is trading at 1.3442, which is lower than this week's high of 1.3525. Fed decision. The main catalyst for the ongoing Gbp USD sell-off is the hawkish statement by the Fed. To a large extent, the Fed did what analysts were expecting. It left interest rates unchanged between 0% and 0.25%, where they have been since the pandemic started. The Fed also decided to slow its quantitative easing asset purchases for the 3rd straight month. Its goal is to end these asset purchases in its March meeting. It will then start hiking interest rates gradually in a bid to tame inflation. Therefore, the Gbp USD pair declined because of what the Fed chair, Jerome Powell said during the press conference. Asked about how quickly the Fed was expected to move, he did not rule out an aggressive period of tightening. This means that the bank could implement more than 3 hikes this year. Focus now shifts to the Bank of England, BoE, which will hold its monetary policy meeting next week. The bank is expected to maintain a hawkish tone considering that the UK economy is doing relatively well. Meanwhile, investors are watching the political situation in the UK, where the Prime Minister is facing challenges. The main concern is that Downing Street held a series of parties at a time when the administration was promoting a lockdown. As a result, there are questions about whether Boris Johnson will complete his term as PM. His stay will depend on the report by Sue Gray, the second permanent secretary in the Cabinet Office. Gbp Usd Forecast. The 4-hour chart shows that the Gbp USD pair had a pullback during the American and Asian sessions. It is trading at 1.3437, which was the lowest level since January 3 this year. The pair has moved slightly above the 38.2% Fibonacci retracement level. It has also dropped below the 25-day and 50-day moving averages while the MACD is below the neutral line. Therefore, the pair will likely keep falling as bears target the next key support level at 1.3300. Aud USD Forex signal, drop to 0.700 likely with focus on RBA. The pair will likely keep falling as bears target the key support at 0.7000. Bearish view. Sell the AUD USD pair and set a take profit at 0.7000. Add a stop loss at 0.7150. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7100 and a take profit at 0.7200. Add a stop loss at 0.7000. The AUD USD pair declined to the lowest level since December 2021 after the Fed interest rate decision. The pair is trading at 0.7088, which is about 6.35% below the highest level in 2021. Fed decision. The AUD USD pair declined as the US dollar bounced back after the latest interest rate decision by the Fed. As was widely expected, the bank was relatively hawkish considering that the American economy is doing well. Its unemployment rate has fallen below 4% while inflation has risen to over 7%. Other areas of the economy like consumer confidence and the housing market are also holding steady. For example, data published on Wednesday showed that the U.S. new home sales jumped sharply in December. Previous data revealed that existing home sales, building permits, and housing starts also did well in December. Jerome Powell, the Federal Reserve Chair, said that the bank expects to start hiking interest rates in March. That statement was in line with what analysts were expecting. Still, the chair did not rule out more aggressive tightening in a bid to slow inflation down. The next focus for the AUD-USD pair is the upcoming decision by the Reserve Bank of Australia, RBA. The bank, which will hold its first meeting of the year next week, has 3 options ahead. First, it could start tapering its $4 billion weekly asset purchases and then end the program in May. Second, the bank could start tapering the purchases and then put a review in May. Finally, it could terminate the program in February and then point to rate hikes later this year. With other central banks tightening, there is a likelihood that the bank will embrace the latter option. Besides, the job market is robust and inflation has also risen recently. AUD-USD Forecast. The 4-hour chart shows that the AUD-USD pair has been in a strong bearish trend in the past few days. The pair declined to the lowest level in more than a month after the FOMC decision. By so doing, it managed to move slightly below the key support level at 0.7090, which was the lowest level on December 20. The pair has moved below the 25-day and 50-day moving averages while the MACD is below the neutral level. Therefore, the pair will likely keep falling as bears target the key support at 0.7000.